What if your money could keep working, even when you're asleep? Not by clicking some get-rich-quick button, not by buying a questionable online course, and definitely not by believing someone who promises you $10,000 a month with zero effort. Real passive income is different. You usually have to put in money, time, or effort up front before the income becomes relatively hands-off. And today, I'm going to show you 5 realistic passive income streams that people in the US can use to build additional cash flow over time. Some require very little money. Others require significant capital. But the goal is the same. Stop relying on only one paycheck. High-yield savings accounts. Let's start with one of the simplest options, a high-yield savings account. If you already have an emergency fund sitting in a traditional savings account, you may be leaving potential interest on the table. A high-yield savings account allows your cash to earn interest while you do absolutely nothing. For example, imagine you have $10,000 saved. If your account earned 4% annually, that would be roughly $400 in interest over a year, before taxes and assuming the rate stayed the same. That's not going to make you rich, but that's actually the point. Passive income doesn't have to start with thousands of dollars every month. It can start with your existing cash working a little harder. And unlike many investments, a bank savings account can be useful for money you may need soon. Just remember, interest rates can change, and you should compare the account's APY, fees, withdrawal rules, and FDIC insurance status before choosing one. Dividend-paying investments. Number 2 is investing in assets that can distribute dividends. When you own shares of a company or certain funds, you may receive part of the profits as dividends. For example, suppose you eventually build a portfolio worth $25,000 and it produces an average 3% dividend yield. That would equal about $750 per year before taxes and assuming the yield remained unchanged. Again, not life-changing money. But here's where compounding becomes interesting. Instead of spending those dividends, you could potentially reinvest them. Over many years, your investment can grow, and future dividends may be generated from a larger portfolio. But there's an important reality check. Dividends are not guaranteed. Companies can reduce or eliminate them, and stock prices can fall. So don't choose an investment simply because it advertises a high dividend yield. The goal is to build a diversified, long-term investment strategy, not chase the highest number on a screen. Rental real estate. Number 3 is rental real estate. This is one of the most well-known forms of passive income. You own a property, a tenant pays rent, and after expenses, you may have positive cash flow. But here's the part that social media often leaves out. Rental property is not truly hands-off. There can be repairs, vacancies, insurance, property taxes, maintenance, and tenant issues. The IRS generally treats rental real estate as a passive activity, but there are specific tax rules and exceptions that can affect how rental income and losses are treated. Let's say a property generates $2,000 in monthly rent. That doesn't mean you made $2,000. You still have to subtract the mortgage, taxes, insurance, maintenance, vacancies, and potentially property management. If the numbers still work after those expenses, rental real estate can potentially create long-term cash flow while also giving you exposure to an appreciating asset. But you need to run the numbers before buying the property, not after. REITs. Don't have enough money to buy an entire rental property? That's where REITs, or real estate investment trusts, can become interesting. A REIT allows investors to participate in real estate without directly owning and managing a property. Instead of finding tenants or fixing a leaking roof yourself, you own shares of a company or trust that owns or operates income-producing real estate. Some REITs distribute income to investors. This makes them worth researching if you want real estate exposure without becoming a landlord. But once again, there's no free lunch. REIT prices can fall, distributions can change, and different REITs have different risks depending on what type of real estate they own. So think of REITs as an investment category, not a guaranteed monthly paycheck. Digital products and royalties. The 5th stream is completely different. Instead of putting your money into an asset, you can create an asset. For example, an ebook, a template, a stock photo collection, a digital course, a software tool, or another piece of intellectual property. The idea is simple. You create something once, put it in front of potential customers, and build a system that can continue generating sales without you personally delivering the product every time. But again, this isn't instant passive income. The difficult part happens before the passive part. You have to create something people actually want. You may need marketing, customer support, updates, and ongoing improvements. And depending on the type of intellectual property, tax treatment can also vary. The IRS distinguishes portfolio income, such as certain royalties, from passive activity income. So passive income in everyday language doesn't always mean passive activity for tax purposes. So don't build a digital product because someone says it's easy. Build it because you can solve a real problem.
Here's the biggest lesson. Passive income isn't about finding one magical investment. It's about building assets that can produce cash flow without requiring you to trade every dollar for another hour of your time. You might start with interest from your savings, then invest for dividends. Later, you might consider REITs or real estate, or you might build a digital asset based on a skill you already have. The important part is starting with what you can realistically afford and understanding the risks. Because the goal isn't to make money while you sleep next month. The goal is to build a system that can potentially keep working for you for years.
If this video helped you, hit the like button, share it with someone who's making six figures, and subscribe for more practical money and investing tips. Thanks for watching, and I'll see you in the next one.